In today's video, I'm going to give you my exact simplified day trading process. If you're a total beginner, you're going to get a clear, repeatable system that you could apply starting today to make consistent profits day trading options. So let's get straight into it. So the goal is by the end of this, you'll finish with understanding a checklist, the step-by-step flow that I follow every day, and plenty of trade examples. I want to get right into the playbook with you guys. We're going to get into practical examples on the charts, all from trades just from this month. And we're also going to be talking about the process so you can make this repeatable. So practical plus systematic and a skeleton, a framework. That's my goal, to just provide you with the repeatable framework that you could use every single day as a day trader. So the first thing we want to focus on is the big picture. So whenever you open up a stock chart, what you're focused on first is the big picture. You're looking at the high time frame. Whenever you're on the big picture is when I'm marking my supply and demand zones and I'm planning my bullish or bearish scenarios. And that's what I find here on the high time frame after I mark my supply and demand zones. What I want to get into first is a checklist so that you guys could understand this repeatable process first, and then I'm going to show you like multiple examples, just like, okay, look at it. So the first thing is my trading process. So all of my trades usually align multiple confirmations, and I look for evidence that price is going to move into a certain direction. I don't predict at all. I just look for evidence. So my confirmations, I will seek at least 3 or more of these confirmations to align before entering a trade. So the more confirmations that come together, the higher probability of a successful trade. So by waiting for multiple confirmations, I increase the reliability of my trade setups. Each confirmation adds a layer of evidence that supports the anticipated direction of the trade. So by requiring multiple confirmations, I mitigate the risk of false signals and increase the probability of entering trades with favorable risk-reward ratios. And it helps me filter out potential setups that may be weaker or with a lower probability of working in my favor. So with that, this is like the whole checklist. You don't need to have every single one checked off. You just need at least 3 to align in your direction. So I'm going to write it right here so everyone knows what the checklist is. So S&D zone tests, key level breaks. Key level could also include trend lines. These could be used on multiple different time frames too, so this is not for a specific time frame. But when I talk about open price, I'm mainly talking about the 5-minute time frame. So one thing I analyze is the price versus the open price, and I'm going to show you guys examples of all these things. So if you guys don't know what I'm saying right now, don't worry, we're going to get into it. I'm just writing the checklist right now so you guys could see it over and over again. So the 9 EMA and the VWAP alignment is part of my checklist, and what this is these are the common confirmations I use pretty much on a daily basis. So you don't need all of these. Typically in the best trades, they all just so happen to align, and that's evidence that price is going to move into a certain direction. So these are the types of confirmations in the checklist. It either tests a zone or it breaks a key level, like from a chart pattern. So a key level could be a horizontal channel, it could be a trend line, it could be a level that was support or resistance, just an area that's key. It could be like 100 or 200, a psychological level. Price versus open price on the 5-minute chart. If price opens and it's holding below the open, that means on every time frame for the most part, obviously on the daily time frame, it's a bearish candle. So I like to align myself with the high time frame. So just by looking at the 5-minute chart, if you see at 9:30 a.m. the price that stock opened at, and you see, okay, where's the current price relative to that? If it's below it, that's bearish. If it's above it, that's bullish. Same with 9 EMA and VWAP. If the current price is above VWAP, that's bullish. If the current price is above 9 EMA, that's bullish generally. So if the current price is below VWAP, that's bearish. If the current price is below the 9 EMA, that's bearish. The 9 EMA and the VWAP tend to act as a dynamic support and resistance level. Volume price analysis validation. I have a whole course specifically on this confirmation, and it's key. It helps me determine what's a strong trade setup versus a weak trade setup, and bullish versus bearish structure and candlestick cues. You could think of price action, higher highs, higher lows, candlestick patterns, candlestick strength meter, and chart patterns, double tops, double bottoms, reversal, or continuation context. So was it previously in a really strong uptrend, and then earnings came out and they came out bad, and then it broke below the trend line, and then it went below the indicators? Well, that's context of a reversal. So if it's also going to test the supply zone, maybe you'd take a put from the supply zone test because there's evidence that price may continue to reverse. Or if the stock has been in a really strong uptrend and it's continuously making higher highs, maybe you mark a demand zone and you wait for price to come back to the demand zone, and then you take a call because that's continuation of the uptrend. So this is the first part. It's basically, I want to fit things together for you guys. Get the big picture, fit things together. Every single trade I take has a two-step logic. So you guys have to remember that my strategy is supply and demand zones, my levels of interest. My timing, my entries is confirmations, which is a second part. So there's a two-step logic to it. So it's not just 9 EMA and VWAP. That's not the thing. There's more to it. So the first step is identify levels of interest. And that's going to be mainly my supply and demand zones. 80-90% of all my trades are at supply and demand zones. Trend lines could also count. And patterns too. Like if it was a support from a horizontal channel, or if it was a trend line, those work out too. So those could be your levels of interest. I mainly use supply and demand as my levels of interest because that's my main strategy and that's what works pretty well for me. So this is step one. You identify your level of interest. But what I mean by identify is price actually has to test your level, and it tests your level first. The whole point of identifying it is to wait for price to test your level. And then once price tests your level, the second part is gauge how price reacts to your level. So that is looking for confirmations. So it's the two-step process. First, it tests the zone, then you look for confirmations. You wouldn't look for confirmations or enter any trade if it doesn't test your supply or demand zone first. So that's very important to be systematic. Wait for it to test your key level. Don't rush into the trade. If it's like 20 cents off and it didn't test your level, be patient, wait. There's a lot of you guys here who've maybe even taken trades and it was like so close to testing your level and you're just like getting excited and rushing into the trade, and then you get stopped out 10-15 minutes later, but then it reverses and it goes back in your direction. But it was a fault of your own for being impatient. So that's important. Wait for the level to be tested and then analyze the reaction of the level. This is the level, the test or the break, the reversal or the break. And then these are like the confirmations. So it could be 3 of any of these to tell you to enter your trade. So every trade basically has 3 core phases, and I'm going to walk you through a bunch of trades I've taken this month, each phase of those trades. So first is my pre-market prep, which is marking zones and planning scenarios. And then second is entry confirmations, and of course third is exits. So we're going to be discussing all of these 3 core phases of my trading system with like my real examples as well. My standard basic checklist for an A+ setup for entry confirmations is basically price action structure. You could call it price action market structure for the first one. So like that price action confirmation, market structure confirmation, plus VPA, plus the trifecta indicators. So this combo has been working like fire for me this whole year. 9 months straight I've been using this checklist, and it's been like the easiest version of trading that I've done in the past 5 years, like this past year, because I've really simplified it down instead of like waiting for a chart pattern or waiting for a trend line break. So we're going to show you some examples of it too. So my exits for the most part are systematic. I use a 9 EMA to manage my trade, and or I just go for a 1-to-3 risk reward ratio, hard stop loss and target. So this is very simple. This is a very simple process. So I want to just show you guys examples of that whole thing. So like I said, step 1 is pre-market prep. So first it's identifying your supply and demand zones. So let's come back here. So first, we focus on high time frame first. So for day trading, usually I start on the 4-hour chart. You also see I do mark daily zones sometimes. So you could start on a daily time frame, then go to the 4 hour. Let me actually write it down for you. So if you want to know what time frame order for multiple time frame analysis of S&D zones. So that is a mouthful of a title, but this is pretty much the order. 1 day, 4 hour, 3 hour, 2 hour, 90 minute, 1 hour. So I focus on the high time frame first. So whenever I tell you high time frame, it's these time frames, no other ones. These are pretty much the only ones that I look at. So we find and mark supply and demand zones on the higher time frames first. The reason why is, of course, as we've discussed in the past lessons about supply and demand, is that institutions have their transactions at the supply and demand zones. So typically the first test of the zone is the strongest. So fresh zones will have the strongest reversals usually. So you work from your high time frame and then you go down to your low time frame. So this is marking zones, and then timing entries is a different time frame. We're going to talk about that after, but I only use the 5-minute mostly for timing entries. So for pre-market prep, we focus on these time frames and we find all these things just only on these certain time frames. So let's come back here. And one thing that I focus on is I just want to mark the nearest and relevant zones. So I focus on the zones close to current price. So we're just going to focus on the zones close to current price right now. So current price is this flag here. This recent candle all the way at the right. That's current price. This is current price. That's the previous session's candle close price. So I find the zones closest to current price. Right here, this is Netflix on the 1 hour time frame. And this is a 1 hour demand zone. Drop, base, rally. Close to current price. And we have this rally base drop supply zone close to current price. So my plan is very simple. So what is my plan? How I do my plans is actually, I want to show you guys every day for the past couple months, I've been just using this cheat sheet. So it's very simple to create a pre-market plan. Once you identify your demand zone, you'll be like, okay, Netflix is kind of in an uptrend. It made a higher low. It made another higher low. A fresh demand zone formed. It might pull back into the demand zone. Maybe we could target the supply zone. So that's how I'd set up my plan. You guys could come here and search cheat sheet, and I'd copy this and I'd paste my plan right into there. So I'm waiting for the demand zone test. And this tells me how I will react once the market opens, what confirmations I'm looking for, it aligning with the trifecta indicators, the candlestick pattern, and the volume price analysis. So I do write it out here, and then I explain, you just target the next supply zone above. So creating the plan is simple. You use the cheat sheet. So you enter a call from the demand zone, and then you target the supply zone above. Before the market opens, you could create that as your plan. And from there, we do our pre-market prep. So, like I said, mark the closest zones to current price, and fresh zones are higher probability. So I want you to take a look at this. This is a fresh zone that just formed yesterday. So if price comes into it and tests it today, that's a fresh zone, which may be higher probability for a retest right here for upside continuation. So that's important to know. So if a demand zone is tested, you're looking for calls targeting the next supply zone above. If a supply zone is tested, you're looking for puts targeting the demand zone below. I have a couple lessons explaining the high time frame indicators I use, but this lesson explains some high time frame indicators I use, multiple time frame market structure and bias. So here on the 1 hour chart specifically, I use these certain indicators. The 20 simple moving average is the short-term trend. The 40 is the medium-term trend. The 100 is kind of the long-term trend. So you could see current price relative to those trends. And you could see here that price had just reclaimed above those indicators, which is a bullish signal. So when current price is above a moving average and it crosses above a moving average, that's a bullish signal. So what I do when I create my plan is I don't just identify my level of interest, but I build confidence when I'm creating my pre-market plan, actually.
So like I'll build my watch list. So for example, this one trade, I chose Netflix. We're going to look at some other examples. But from there, I want to note what's the context on the chart. What might make it high probability that the stock's going to go down or high probability that the stock's going to go up. And of course, then I write my pre-market plan. So I showed you the cheat sheet. You could use that to write your plan. Something I want to explain to you too, if you're new, is from supply zones and demand zones, I look for reversals and I also look for breakouts. So typically we're going to look for a reversal, which means if price comes into the demand zone, it has to come down into the demand zone and it has to bounce from the demand zone towards the supply zone. So that's a reversal, a demand zone bounce. That's a reversal. So we look for the reversals from the zones. So if price comes up into the supply zone and it rejects, that's also a reversal. So we look for the reversals from the zones, but we could also trade breakouts. So for example, if price breaks below the zone, we could also take a put targeting the next zone. So what's most important is that I mark my zones a good distance away from each other within the average days range. And from there, I make sure that the distance between my zones is around 1 day's range as a day trader. And then I could trade a reversal or a breakout. So from here, this is pretty much the pre-market planning section. I identify the zones, then I use the cheat sheet. I make sure I kind of see where my confluence lies. So for this chart, I say, okay, there's a little bit of bullish signals because price is above these indicators, for example. Or the fact that price tested from a very strong daily demand zone and it did bounce. Also, the fact that it went to a low of a consolidation range and it went up. So as you know, like with consolidation, you buy low and you sell high. So if this is the range and it's in the middle, we might expect some upside continuation towards the high of the range. So that's high time frame, context, and confluence stacked before we even enter a trade, which is important. Just so you get it. So high time frame context is a higher low formed on the test of the 1 day demand zone. Plus, it's above the 1 hour time frame indicator stack. So those are two bullish confirmations or confluences on the high time frame before I even create my trading plan. So with that, if I add, okay, it tests the demand zone, that's 3 things that could give me a high probability bullish setup before the market even opens. So this is an important part of the process. It's not just 9 EMA and VWAP, it's identifying the zones. But the next step is your trade entry confirmations. So I trade only when I have my 3 confirmations, my rinse and repeat trading setup. So I only enter if the price action / market structure plus BPA plus trifecta indicators are in agreement. For the most part, that's the only time whenever I enter a trade. This is the open drive setup that I've been using like all year this year. There would have been the potential to enter this trade earlier. I did not decide to, but I was really considering it to enter by this moment. But I didn't have all my checks on my checklist, so I'm gonna explain that to you guys. So first, it tested my zone and there was immediate reaction. So that's what I like to see, a zone tap with immediate reaction and lower wicks like that. That's a good confirmation. But for the checklist, right now, the candlestick price action pattern would be that you could say this is a 3 inside up, or you could call it a piercing candle, but that's a bullish candle pattern right here, even with the tweezer bottom. So that's a bullish pattern right here. So I have the pattern confirmation. Also for volume price analysis, we have very strong above average volume. And then on the high time frame, we're in an uptrend. We're above the indicators. We already have all those confirmations. That's like 4 things aligning. So the reason I didn't enter is because of the indicators. The candle was below the indicator. So all of these candles didn't close above the indicator. I entered when the next candle actually closed and went above the indicator. So you could have potentially entered early if you had a different confirmation other than the indicator, or if you're focused more on your high time frame analysis and it aligning with the trend. But this is where I decided to enter. I entered when it went above the 9 EMA in the VWAP, and then I put my stop loss below the swing low. So I didn't have to risk all the way to down here. I put my stop loss below the swing low, and then I'm targeting the supply zone above. I was a little impatient. It actually did hit my target 2 hours later. So I ended up exiting here by noon because I don't like to be glued to the screen all day. But if I was more patient, it did hit my full target 2 hours later. So this Tesla win, this one was a 20% win. So I only got a 1-to-1. I risked 20%. I actually got 20%. But if I waited the 2 hours, it hit my target. It didn't even close below the 9 EMA either. It was just like really slow. It could have been a 60% gain, just being patient. So Edward Rivero says the checklist makes sense. So you do high time frame context, low time frame checklist, then you time your entry and you're able to enter within the first 30 minutes or so. The only hurdle is patience and discipline.
If you would like to dive deeper into this exact trading strategy, click the link in my description to apply for my one-on-one mentorship program. Thanks for watching. I'll see you in the next video.